Welcome to UrbanHood, your learning platform. Urban Food Alliance services the needy in our neighborhoods.
I have one question to ask you.
Yeah, go ahead.
Are you familiar with the TSP, government TSP,
Government TSP.
the thrift saving plan?
No.
No, okay.
Anybody is here familiar with the government TSP program? If we have any government employee, I know that we have some government employee in the room.
I'm familiar with it.
Yeah, Mark, if you can explain to the gentleman who asked, if you don't mind, share
I'm
your name.
I'm gonna ask you that question because the TSP has a G fund and C fund and S fund and all that.
Mm-hmm.
So I have put all my money in a C fund.
Mm-hmm.
So I'm thinking about before election, I'm gonna move to G fund, which is very safe fund.
Mm-hmm.
So I'll just get a consensus, should I move it or go 50-50? Because if Trump wins, the market is going to go up. So I don't want to lose that upside.
Right.
But if Biden wins, the market may go down.
Mm-hmm.
Then G fund will be the perfect.
Mm-hmm.
But I don't know.
So
Mark,
let me Mushi, let me translate for you.
please.
G fund is basically government treasury bonds, and all the funds. And there's only there's only a very few choices in the thrift savings plan for federal employees.
Mm-hmm.
And the G fund is basically the U.S. government treasuries.
Mm-hmm.
The C fund, I think, it's similar, I think, to a broad fund like an S&P 500.
Mm-hmm.
So it would be like an equity fund. And then, there's another fund that you have corporate plus government bonds. And then, there's some other, I have to look them up, but there's only about 5 of them.
Mm-hmm.
And then people do mixes of them. You can allocate, how much of you want of each one. And then they have these things called life cycle funds where you say, I'm going to retire in 10 years or 20 years.
Mm-hmm.
And then they just calculate the allocation for you. But he's basically talking about moving from what he has now is a very broad,
Aggressive fund.
Stocks, the C fund, moving it into government treasuries. The only thing I'll also add that is that when you do sell, it's like a mutual fund. You get whatever the price is at closing.
Yes.
Yeah, you have to put a seal. If you want to sell something for like on a Thursday, you have to put the order in before noon Thursday. You could put it in the day before, or you could put it up until noon. But so
yeah, that's correct.
Right. So I don't know if that helps, but I think he's basically asking more or less about moving from stocks to bonds.
Right. Yeah. Thank you. I think that's what I understood. It looks like should you be in the bond market or should you be in equities market? In the equities, like mutual fund is in equities market, right? So on bond equities and in the election, whoever comes in, you do not know, but some of the things, I do not know if you can look into in your past performance, look at the historical performance for last 10 years, whichever fund you have. And then it kind of gives you an idea. Just go after around 2008. What was the performance rate around between 2008 to 2009?
Yeah, I did that research. Okay. Basically, I did pretty good because I had a 34, 34, 33 C fund, S fund, and 2050 L fund. I mean, good return.
Mm-hmm.
But the thing is, G fund. If you move to G fund, if market crashes 40%, nothing happened to me basically.
Mm-hmm.
I mean, my money will be almost the same or maybe a little bit more.
Mm-hmm.
But the only thing I'm afraid of is I have very heavy duty balance. I mean, heavy duty portfolio. Mm-hmm. So 2% means I'm losing a lot of money.
Okay, got it.
So I may just split 20, all other funds.
Mhm.
What about international fund? The person who worked for the government. What about international fund? International fund safe? Like I fund?
Mark, are you familiar
Well,
with the
I mean,
iFund?
I would say, I mean, the thing is all the funds are managed by BlackRock, and one of the things is that part of the deal is that they're very low management fees,
Mhm.
on all these funds.
Yeah.
But that I think BlackRock, if you're going to be in international funds, because this is for all federal government employees, BlackRock is at least going to be, I think, very conservative, in its choices. And some people feel like, I mean, maybe Mushi has some thoughts on this in general, is that people are starting to talk that maybe one is better off diversifying now by having more of their assets in other markets besides the U.S. So, but I think, as far as international funds go, I would say that the TSP would be on the safer end of them. They wouldn't be highly speculative.
Yeah. Which agency you work for?
I used to work for the Department of Defense.
Oh, I see. Okay.
And I worked for the Department of Navy.
I see.
And then I was a government contractor, but I didn't TSP. My wife's worked for the court system since 2008. So all of her money is in TSP. And I have to be honest, we're pretty conservative because I'm 66 and she's turning 64. And she has her entire TSP right now in bonds. And we're, having some other funds that we are having E-Trade that we experiment with, but we are on the very conservative end this year.
Yeah. I work for GSA.
Mhm.
I don't want to take too much time and go ahead.
No, that's okay. That's good. That's exactly what type of thing we wanted to make it a conversation today.
Yeah.
What is your name, by the way?
My name is Kamar Hassan. I'm from Rockville, Maryland, Washington, D.C. area.
Yeah, hi, Kamar.
Yeah.
Okay, let me just share. Okay, good. We have, actually, I have Vic is here, right? Vic?
Yes, Coach, I'm here.
Okay, let me see who else, co-host. Just wanted to say, I made you co-host, and I see that Abdul also here. Okay, and a couple others. Whoever wants to help out on the side, let me know. I'll make you co-host. Then when I go in presentation view, you guys can just keep an eye on the room. Who else? I don't see Omar here.
I'll take care of it, Mushi, don't worry.
Okay. Okay, you and Abdul are there.
I'm here. Abdul's here. I'm here.
Okay. All right. Okay, guys. You can see my desktop, right?
Yes.
Cool. Welcome. I know that we'll have some new guests. So when we get it, and then we'll continue. Just to give everyone the introduction, I am Mushi Buyan. I'm with UrbanHood organization. We are a nonprofit organization. You can see our website, urbanhood.org. If you have not visited, those who is new, please visit our website. You'll find a lot of information, educational information, free video, the blogs, and also the events and upcoming events. And sometimes, we run some promotions to be a member with us. So all the details are on our website. And the food called our parent organization is urbanfoodalliance.org. What that is, that organization focuses on feeding the needy in our states. We are located in Central Jersey, in New Jersey, in Princeton, New Jersey area. So on our website, all the details are there. You can take a look. Before we go further, please do read this disclaimer. Understand everything we are sharing for educational purpose only. Everything we are sharing educational purpose only. We will be talking about some of the stocks, ticker. This is our opinion only. We'll not offer any financial advice in this session. However, if you take our advice and make an investment, we want you to do your own due diligence. And if you lose your money, you are responsible for your loss. UrbanHood is not responsible for your loss. Now, today's topic, before we go there, I wanted to start with this code. You guys all can read it, and I thought, this is a great code I like, that when everything starts with our mind. If you think you cannot, you can. You're right. If you think you can, right? I want to share with you that I have two teenagers in my house, and when I started talking stock trading and discussing with them at the beginning, they used to always say, this is, I don't get it, I don't understand why I am still in school. One is 10th grader, one is in high school 12th grader. Now, when they look at any company, even on TV, the chart, they kind of can tell what's going to happen, predict, right? And then in their classroom, I hear that now they're having discussion about that, about the country, that, if the country is in recession. And then I remember that my daughter make some comments, since they're all starting, I guess, going to school from home, and I'm hearing some of the conversation. I am amazed the amount of knowledge they have now, and they can talk about it. And the teacher was so impressed. How do you know all this? Because she was curious to learn. I said, Papa, everybody is losing job. Everyone's doing this, but how it's still people make money in stock market? I don't understand, right? So then as I started explaining those things to her, now she not only she thinks differently than you and I when we used to be there, but at the same time that she's thinking that why don't I take advantage of some of those the downside if there is a company goes down and say, hey, today Microsoft stock go on this, that, right? And say, oh, do I have Microsoft? Can you get me some? Right? So those kind of things they started thinking. So that's what I want to let you know, that if we can shift our mindset, and when we shift our mindset, we can pass it along to our next generation. So this is a quick overview.
Sure, I can't hear you.
Sorry, you got muted.
Did somebody muted me?
No, was admitting someone and he just.
Okay, that's okay.
Your name came.
Okay. So this gives you an idea that being a member with us with UrbanHood.org, that you get three things: education. This type of thing we do. I not only educate myself, I educate as I learn it, I pass it along. So our community is we are running by with all the community. Everyone contribute. Like you saw that earlier, there is somebody asked a question, I don't know answer. I did not know about TSP program. I worked for government just like Mark in 2008 when Obama became president. I wanted to do something and make a change, make a difference. Then I worked for Department of Commerce. But that time, within 6 months to 9 months, I realized that the way they move very slow, and I'm always thinking like will think very fast. So I just did not feel like I belong in that place. So I left that Washington after 9 months. I was a contractor, and they wanted me be full time, but I did not want to be part of it. Right. So we're coming back to this community as I started learning, and we build a community where we share with one another. That's what is education. And then when we trade, the stock market is about that edge. So you need to have information, how authentic this information, what the source of information. Based on that, then you make a trade. So that's what you need to have if you want to be ahead of other people. Edge. And the thirdly, support. We help one another. At the end of the day, we all make money. When we make money, we donate to the cause we really care about. So that comes to the third part. So together we learn and we protect our hard-earned money. These are the things we do every week. Here you can see on our website also all the details in weekly events, every weekly, even daily. We offer the support to the people who needs it. This typical things that you can see what we do in the community, and this is some of the membership flyer that you can take a look at it. And the other thing is the classes that we have. Details are sitting here. Now today's session, I thought, okay, let me at least share with you. As I'm looking at it in this session, there are certain things I have not updated, but just please do understand. We'll try to cover every single thing I have here. At the end of the day, you're going to walk away with a concept. Okay, this is recession. At least you have some understanding. So this session, when I was thinking at the beginning, I did not know that I will have enough content. But as I started getting deeper and deeper, I figured there's no way I can cover all this stuff within 40 minutes or 1 hour or longer. And many of you know that we also within the community reached out who wants to be part of it. It is sad to say that I did not have one single person stepped up and told me that, hey, Mushi, I want to help you out. Tell me how can I contribute? Remember the one I said, what did Henry Ford say? If you think you can, you can. If you think you can't, you can't. So then I figured, you know what? I got to shift in my mindset. And then I ended up not only getting enough content, you will be the judge of it, what we have. So let's say this. Whenever I hear about stock market, people always talk about it. Look, everybody's losing job. Look what's happening. Look at this. But based on this today, you can see the date. There is the date Bloomberg, October 27. And I was watching TV. And as I was watching TV, Bloomberg TV, and they just came up, it just caught my attention. The gentleman, Neil Kaiser, he's one of the Bloomberg's advisor and the analyst. He says, what is it? Stocks are not the not the economy. And he talked about a lot more details about it, And this is what we try to tell people. When you see stock market and you start looking at everything outside the market, you're judging yourself. You know what? This is crazy. This is all this is wrong. It should not be, but it is. Think of the stock market is forward looking, and today what's happening in front of us is today. Tomorrow is current present. So stock market and economy is not the same. And the gentleman spent good amount of time to explaining and data collecting different source. I'll share with you later that there is no connection with economy and the stock market. All right. Once no connection, there are indirectly with the I'm talking about macro level. All right. So before we go further, just want to what makes it a recession whenever a recession comes. So I want to make sure we are all on the same page. So when it talks on the same page, I have an answer, just I'm going to quickly go back and I wanted to hear from some of you. When it comes to recession, what comes on your mind?
Two consecutive quarters of negative GDP.
Job loss.
What else?
Unemployment.
Losing job.
Unemployment, yes. What else?
Deficit.
Deficit, okay. GDP and yep. What else?
Regarding housing market?
Housing market, good one, correct. Yes. What about the housing market?
Interest rates.
Interest rate.
Household savings is decreasing. Savings are decreasing.
Household savings. It's like you think about do people have enough savings, right, to survive, right? Okay. What else? It comes in your mind. Which is good. Everything is good. That's
manufacturing.
why.
Manufacturing output.
Manufacture, very good one. Yes, new construction, new development, manufacturing slow down, right? as you can see that most of this stuff you guys already know the answer. All right, when it comes to the recession, we are talking about massive decline in all these activities you mentioned about, just currently the GDP. You mentioned about money, that people do not have enough savings. You mentioned about income. When it says that not enough saving, people income also, the raise. Are you getting on recession? Do you keep getting raise from your employer, or they freeze the raise, right? Those who have job.
No bonus, no raise.
Yes, no bonus, no raise, right? And then the employment, whenever it comes to unemployment, that there is, look at what's happening, that so high employment number is going higher and higher, right? And you go claim your unemployment, those who is lucky enough, especially if you are a citizen or you have the green card, that you can get it, but there are limitations, right? And then the housing, the one less, okay, look into real estate, with a new development, you have existing house, old house, all of those sales slow down, right? And then in production, what Cindy mentioned, the manufacturers, look at that, and new construction, new manufacturer are the numbers. One of the numbers we usually use on Friday nights or during our midday, we talk about it, PMI number. Those are, why is that number, right? Those numbers is good or bad. That tells you the health of the manufacturers. And overall, that, business to business, what's that number, the CCI and all those indices or indicator we are looking at, that tells that. So if you look at, there are more you can add on. So I wanted to make sure that when we talk about a recession, these all can be part of the recession. You and I, just So now the question comes in that, are we in recession? What do you guys think?
No.
Not so far, no.
I think we do have one thing definitely qualifies for recession is our budget deficit has increased a lot.
Mm-hmm.
I say since February 2020, we've been in recession. It hasn't been bad, but we're actively in recession.
When I say actually, who officially announced that the country is in recession? Do you know?
Treasury?
No, Fed. As long as Fed is printing money, we will not be having recession, I think.
Yes. We do not want to be political here. As long as it's officially federal is the one, Federal Reserve in USA, and those outside in USA is looking at, they have a central bank. They are the one and look into the holistic view of the country, the GDP and economy, and they say, okay, country is in recession. Okay.
So it has to be declared. It has to be declared.
Officially, they have to, because what happened there, remember the budget, who makes the budget of the country and all this? It's Fed, right?
Uh-huh. But based on those characteristics that you had on the slide, it seems like we have some of those things going on, but because the Fed has not announced it, we don't consider ourselves?
We are, I mean, they did announce, well, economists, the National Bureau of Economic Research said that we were
in March or April, they did say countries heading to recession, right?
Yeah.
If you look at, they see countries heading, but officially they did not say that National Bureau of Research that we are in recession, and that they collect all the data, they pass the data back to the federal, and Federal Reserve has to come in and say, yes, we see all kind of indication that the country is officially, we are in recession. Okay. If you go back, that when is the last time we had a recession? Anybody remember when did we have the recession in this country?
2008.
The financial crisis?
Financial crisis 2008, but officially when was that announced? Anybody knows? December 2007. December 2007, it was officially announced that the country is in recession.
But do we want to wait until it is announced to prepare ourselves, or are we able to see signs?
Do we want, that comes you and I, right now? Why are we sitting here? We are here because we want to stay ahead, prepare ourselves, right? Every day when we come in midday or other time, the Cindy and other that we're learning, why are we doing it? So that's why we kind of control our destiny, not the country, not others. We are doing our part, right? And be a little bit more proactive than more like reactive, correct?
Mm-hmm.
Yes.
Yes.
So look at this. This is a diagram from the same source, came from GDP. Look at that right now. The GDP number since happened all of a sudden. Look at GDP. However, the fresh trading, the GDP declined, huge decline. Now, why is that? You and I, we know that because of pandemic, things shifted, right? And now, like someone mentioned about that, now Fed is printing all this money. Everything else running, like government is not shutting down. They are not reducing much of their budget. Their budget is keep growing and increasing. And if anybody work for government, and which I did, what happens when the money you have left over in your budget at the end of the year? What do they do with that money? Anyone can answer?
Deallocate.
No.
They provide contractors a lot of contracting projects.
Most of them spend it. They don't give it back. Oh, we don't need this money. So I will tell you that's why also another reason I did not like the way they think they're spending money in especially government. And when I was in government working for it, my management came to me. I was leading project and just come saying, okay, Mushi, we have this money. Do whatever you need to do, burn it. I said, what do you mean? I said, look, if we do not spend the money, our next year budget is going to be reduced. We want to make sure we use it. So justify the costs and go ahead, spend the money. And then I thought that was so bad. It's like, come on, we are in the countries in recession, and you're telling me that the money you got in the budget that we have to spend it, and a lot of nonsense areas that we ended up spending. We're not going to go in that there for now. But for now, look at our GDP shrunk so much. But some people take the responsibility, some don't. At the end of the day, everybody has to come together. So that's also coming back to my next topic, that okay, our GDP is shrinking because so many economic factors that we discussed is already going down. So what are some of the facts that you and I can think of? That we mentioned, stock market is not the economy, right? That I shared with you that now this is the proof you can look at. What it is on the GDP, the white line shows you the GDP. The other line, you're looking at the yellow one, it shows you the S&P, Standard & Poor. That's like top 500 company in this country. Standard & Poor, S&P 500. They are indices. If you look at since 99 GDP number and you try to correlate these two together, do you see similarity? Any similarity between these two? Anyone? No, right? So there are so many other variables like that analyst was putting together, try to convince that, hey, I looked into all those numbers, that indices, and you're looking at any kind of indicator people tell us, and just see if the stock market and the economy has kind of any correlation, and there he couldn't find it. So this is like but we know when Fed, like the Powell comes in and speaks during the time when he shares some of the economic indication, what's happening. Yes, market varies up and down, but in the long run, the market is is going down, or it was just short term? The question to the people in the group.
Usually it's short term.
Very short term, right? It doesn't stay long for the long term. Now, I want to share with you, Justin, that brings up my next topic.
Rashid, before you go to the next topic, this is Raman. So if we go back to that slide, it's a very interesting slide you have for the GDP, for the S&P, and for the, yeah, this guy, right?
Mhm.
So I think the only correlation I can find is looking at 2007, 2008, when the white line crossed over the yellow line, right?
Mhm.
That's when we went to recession, and then we crossed over,
Yes.
right?
You see the
And
correlation during that time, exactly around that time, recession happened, what happened? GDP went down, right?
right,
And that's also coming back to now as they look at that down, this is the only correlation. There is similarity. What happened that time and now? Now look at now, 2019, 2020. The data is not there yet, but it's going to come up today, later on. But you see that its GDP is coming down, right? It just started turning back, right? So
right.
at some point with the current things happening, that answered the question, people, are we heading to the recession? By looking at this trend, yes, we are, right? It's just a matter of time. When current Fed going to come back and saying, guys, by looking at everything, we are officially in recession. You know, we do not want to mingle this session with the politics. What happened in Washington? Some people, some group says nothing wrong with it. Let people die. This is a normal thing. Some says no. Look, it's getting worse and worse. Right? Who is right? Left or right? So far, you guys are getting it, right? So we need to leave politics out of it. We just need to see what's in front of us by looking at the fact that what you and I can do so we can protect ourselves, protect our future, and protect the people we care about. All right. So now look at this. The one I was talking to. This is the S&P SPY. I put an indicator. This is one of the tools that we use on those who is with us learning stock market and say everything long term. Remember, if you see the long term, what happens in 1998? You see the top price of SPY, $73. What happens at the bottom? It shows you the time. At the right side on here, where I'm moving my mouse, you are seeing the price. So what happened? And around this time in 1999, if somebody would be buying SPY, let's say 1999, it was like this price of this SPY was what? $51. $51 that SPY. But look at today, the price of 2020 SPY is how much? 330. I need somebody good with the numbers. Help me to understand. If I would be putting the money, $100 here, let's say 1994, 95, $50, $60, what will be my growth? What percent of the growth I'll have? If somebody can quickly take a look at it and tell me, all right? Now that's one of the things. If you can shout out, what you come out, what percent you're looking at, finding out. Now that's indices. Now look at the individual company. Let's say Apple. Apple, by the time Apple started in 1998, this is every month, you're looking at monthly. See, around that time, Apple was what? Look at 1999, 2000, Apple was what? 30 cents, less than $10, $1 stock, right? But look at what is Apple today. It's like over $100. So there is a hidden message. I wanted to see what you guys can think of this. What message you are getting so far? Here, and look at the company, Microsoft. Simple. Same thing. If you'd be getting from early on, just put some money in there. This is a $5, 1995, 1999, $10, $17. Today's, where are they? $200.
So Mushi, are you referring to the fact that there's a bubble that we're looking at?
No, I think what I'm learning is it's a long term. If in the long term it pays off, right? So always you should have a set amount of portfolio set aside for long term, and your day trading or short term trading should be a separate portfolio.
Yes, the time, exactly. Thanks, Brad. What he mentioned, exactly. When you start thinking of your objective of how do you protect yourself in the recession, right? Recession coming, and what kind of things, we're going to come back later on, what kind of things you need to worry about. The stock market, there is a myth also about the stock market that, what I hear people say, stock market is for rich people. Is it really for rich people? By looking at this, what you have seen that from here, that even a company like Microsoft, Apple, you could, the $60 is if you go over all the top 500 companies investing in 1999, less than 2000. Here is, this one is 129 if you go. Like today, here, there's a 2000, if you get 2000, if you be putting in Apple, it's like $1. Apple was $1 around that time, 2000. And look at in 2000 time, Microsoft is around what time? What price? 39, this, around that. Don't you think people have $100, $200, $500 to invest? That time?
But
the time.
But
the message I'm trying to give you here, the time. You don't long term that things are going to be okay. If you look at the future, how much time you have that, or you're planning to build your future, that way when you and I will retire, when do we retire? One of the things that people always say, okay, my money is in retirement money is there, but at what point that you said that you have enough money that you can retire? Anybody?
Well, about 10 years ago, I read the statistics was 1.2 million to retire.
So at the end, right, retire is like, let's say, your expense and your current day-to-day life, in order to maintain your lifestyle, do you have, and that your expense and that your income, what comes in, what goes out to maintain your life. If you are ahead of it, meaning what goes out to maintain your life, that you do not have to day and night work just to take care of your lifestyle, then you are ahead, right? You have more coming in than going out. So when they look at 1.1 million, 1.2 million, they look into your longevity. Let's say if somebody retired 65 years, so at the age of 65, and our longevity is like the state of New Jersey around 70, 75, 80 range. Let's say 65, 200, you have another 20 years to live. That you look at 60,000 a month or a year you're spending, do you have enough money that you can survive that 15 years, 20 years, right? So those are the things they look at. Some other factor also, longevity and your health and all the other things looking at the end of the day, what comes in, what goes out. If you are, whatever comes in, your income stream is higher than your expense, that means you do not have to trade your day-to-day time to just have for living, right? So then you just quit your job and just do whatever you love to do. So that's what
question. This is Fran. So you know how you were saying that 20 years ago the stock was 39. Now, as part of our long-term portfolio, do we need to find companies that are now 39, or because you think in 20 years this Microsoft is going to be 2,000 or I don't know, to $20,000 stock?
We're going to come back. What should you do? I'll come back. You are now ahead of that now, instead of ahead of the solution. What's the solution here, right? So what I'm trying to tell you that on here in this diagram, it shows you the current stock market and the economy they are not the same, two different things. So don't judge by looking at what's happening, people losing job, people losing house, hence the stock market is going to be crashing. It's not going to happen. All right, that is not honest. It's not going to happen. Means nobody knows what's going to happen, but it's temporary. So with this, I want to let you know at the same time. Do you know? Actually, I may have a question here. The longest time that recession, the longest recession was the most recent was December 2007. Remember, I told you that, and then ended up June 28. It ended. So it lasted 18 months from 2007 to 2009. So typically when there is a recession happens, that's what that long easily 11 months, 9 months, 11 months, and the last one, the longest one, 18 months. Do you know what was the highest growth? When is the highest growth happens in the stock market? Anybody knows history, that data by any chance, or you heard about it?
After the recession, I guess.
After recession.
After the recession. If you look at in 1929, 30, around that time, Great Depression and the World War, Second Great Depression, and then 2007. If you look at it right after that, around right after 2007 was the one that 2018, that was the highest growth happened, right? So those who is thinking that, you know what, country is going recession, you take your money, put under your pillow. Is this the right thing to do? No, right?
No.
That's what. How often do the recession happen? There's something next I want you guys to think about. How often does it happen?
It used to be every 7 year, around 7 years. Nah.
Any other comment? What else? Others?
Yeah, it said it's 8 to 10 years cycle on an average.
8 to 10 years, 7 years. Any others?
Yeah, average 10 years. Yeah.
10 to 12 years.
10 to 12 years. So you see that we all have something that what we know of, what we heard of, right? There is no right or wrong answer. Typically, yes, every 5 to 10 years, recession happens. And is recession good thing or bad thing?
It's a good, it should happen. You know, it's like addition of stocks.
It's a good thing, right? It's like, should you get sick? It's telling your health. Should you get sick, or is this getting sick is a bad or good thing? It all depends how you take it, look at it, right?
See, I'll just add something to it. I think with the past recession we had in 2007, 2009, right?
Mm-hmm.
I mean, I mean, that's a good analogy you gave, right? Like, you know, the health, right? It tells you about your health. But think about it, over a period of time, we have learned to get vaccination so that we don't get sick, right?
Mm-hmm.
Similarly, I think Fed learned in 2007, 2009, how to keep pumping money into the market so that they can keep the health alive. And probably that's what they did in March until date. That's what they're doing. They're probably trying to avoid it, and maybe they will avoid it for next few years. I think previous recession, they never knew what needs to be done. But 2007, 2009 was a good learning lesson for everybody to make that vaccination and keep injecting money into the economy.
There are, at the same time, if you look at it, currently in the business sector, we're going to come now, we're getting a little bit more harder, some of the areas. In financial industry, why do you think today financial industry is more stressed than others?
Moshi, I have a question for you, if you don't mind.
Okay,
right? So, on the earlier slide, you had shown all the leading indicators for a recession. There was one indicator, the REITs, right, the real estate market. And that typically runs in tandem with all the other indicators.
Is this one you're talking about? Or?
The real estate market typically is also REIT, yeah. So right now, the one thing which stands out as an anomaly is that real estate market is actually shooting up, and it's very confusing. I'm quite perplexed to understand when there's such a high unemployment, job losses, you know, and real estate market is on a high. Do you have a point of view on that?
This is why I was telling you earlier that there are things that indicates, yes, we are in recession, but there are other things indicates, no, we are not recession. Just because of the imbalance happened. Why that imbalance happened? We are dealing with something unseen. Nobody knew that this pandemic is going to come and hit the country, and the whole world is going to be stuck in the house, right? So when we are dealing with all the abnormal things, how can you say that we are in recession? Because not everything is adding up.
Right.
So yes, so when you say that, look at real estate today, that last week the number came in, last month whenever this number, new house sales, old house sales number, the mortgage number coming in is keep going higher and higher and higher. That means when Fed already is announced the reducing, stop the rate interest and that reduce your mortgage interest, more people have now money, the purchasing power, lending power to buy more assets. So then some people are taking advantage of those, either refinance your mortgage or get a new mortgage, invest in a new house or new business, whatever it is, right? So certain group of people have that access to the money. So hence the market is not in real estate is not there like, okay, like 2008 happened. So indication does not tells you that we are in the recession. Not all the indication. There are certain indication is already way above or below the mark. They are saying, okay, country is in recession. And at the beginning, you heard Mark mention that GDP is 2 quarters in a row has to go down, and the earnings 2 quarters, two to 6 quarters earnings has to go down for the S&P business. Are we seeing any of those? Look at what happened to the Microsoft or the business we are looking at. A certain business, they're just going higher and higher. They're going all-time high, right?
Right.
But at the same time, other businesses are going down. So that's shifting mindset, shifting business, shifting the way they do business. Things changed. Who knew that something like Zoom, something like there is a company who is going to build a treadmill, and a treadmill company is going to be today is like one of the top rated company, Peloton. Who knew that, right? It would be a joke if you'd be talking about 2 years ago. The rule is somebody is going to be making a treadmill, and this treadmill is going to blow everybody's mind, right? So back to what we're saying, how often recession happens? Do you think when is the best time to? So now this is like when is the best time to buy a stock?
I have a question, Mashi. So you made a comment like when you were talking about are we in recession, and you said, should we keep all the money under the pillow? So would it be a good strategy then if you are already somewhat vested in long term, just keep the cash, and once because you see the indicators, when the market crashes, that's when you go shopping. That's A strategy. B is what other thing when you're talking about this, and again, this is strictly my opinion, and I have no experience as compared to all you guys. I'm very, very new to this thing, but the way I study this, and even if you look at the data, this is going to be a very interesting and a different sort of recession, because like somebody gave an analogy, Feds have learned and they're basically coming up with a vaccine. They're printing ton of money and they're pumping that in. But in my opinion, what it seems like we're delaying. So we know the elephant is falling, but we're slowing it down. But when it falls down, it's going to bring other things down. And to me, it looks like it's going to probably crash the dollar value as well. I don't know. Have you seen the history, even in Great Depression time previously? People used to hog gold, precious metals. And there has been a time where the government has devalued gold and enforced everybody that you must sell this gold at a certain price to the government and buy back at a higher price later on if you need. So it seems like if the government wants, probably they can do pretty much whatever you want or whatever they want to do, because if you are going towards stock market, you keep cash. If a dollar crashed, your cash value has nothing. You invest in precious metal. We have seen in the history that they may give you a lower price and get everything back from you.
Yep. You're right. So, Omar, thank you for sharing. Exactly, there is no right and wrong answer, right? But this comes back to all of us. All of us have to be individually look back, look at your life and say, okay, what can I do to protect myself, my family, right? Then once your family have the protection there, everything we're talking about now financially, then you think about, okay, how, if I have something extra, where should I put that money in invested? Is it gold? Is it stock? Is it bond? Right? So preparing yourself. So this is how it comes in. Recession is, as I said, recession is a healthy thing. This country needs to have it, but we have to change our attitude. So the attitude comes up with, okay, looking at what you used to have to look at your assessment, your health, not like what you used to, I want this, or do you really need it, right? So how many people you see now buying a new car? Anybody paid attention what's happening with the new car purchase number?
Yeah, it was going up.
New car is down. Old car, if you look at there's economic data coming in and looking at it, they see that there are more and more people buying old car than new car. You'll see a lot of car dealer company on TV everywhere, 0% interest they are going to give you longer, so you buy the new car. And at the same time, there are other things people are thinking, if I get the new car, right, that's why mindset comes in. The new car, that I have a job today, tomorrow I don't have a job. Do I add more liability? Then what happens? Then your credit score and credit history is just get hampered, right? You won't get if you want to get loan or mortgage and stuff, or remortgage your house, that's going to affect your credit history. Those things you and I need to start thinking of. If recession happened, what can I do so I have a good credit history? And do I really need to buy that many extra things, or I just need to have what I need to have, basic needs? So those are shifting mindset. You have to shift your mindset, and then think about spending instead of spending, saving them, right? So everything what I'm saying is step by step, and it's kind of self-explanatory. At the end, some of you said, how long do I keep working and working? Well, you work until you need to. If you cannot pay your basic needs for your life, to maintain your lifestyle, then you gotta be somebody's slave. You gotta have a job to pay your bills. If you have enough income coming in, you're paying your basic needs. Now you are not somebody's slave. Now do something what you really love to do. At the same time, make sure that you do not go in the hole deeper. If you go through recession, that comes back how much money people do ask, spending frugal, or how much money should I save? Anybody knows how much money you should be saving?
They say 10% of your income, or after tax. 10% is the minimum.
Yes, those who started from the beginning. That's it. Anyone else?
I save first and then spend.
You save first, then you spend. That's wise man philosophy. Anyone?
I think around 3 months of budget, whatever we are spending today.
3 months is like, have you heard of a term called emergency fund?
6 months of savings.
Emergency fund, 6 months. Typically, you need to have
1 year.
6 months, minimum 6 months to 1 year, 9 months. It all depends, what your situation is. You need to have that much your monthly expense, all the total expense for a month. In a business, we usually call operating cost. So in your house, you should treat your house like your business, and how much you need to have in order to have light on, food on the table, have your clothes and creams, all the basic needs, taking care of your health. how much money you'll need to have to maintain that lifestyle, the way you are living today. Think of that total money and multiply by 9 months or 11 months, whichever it makes you comfortable. That much money you need to have called emergency fund. Okay. When you have access to that fund, then you start, okay, put it in those fund in a certain, do you keep all those in the bank? No, at least put some money in the bank. You have access to bank, some money you put on some safe for you have a liquidity, high liquidity. Those are all investment ideas. You can think about short term, long term. What short term mean, long term mean, we can all talk another time. But for now, that's what it means. How reassess your lifestyle and look at how much money you have. Do you have enough money? And then once you have your emergency fund, what's the surplus? And those surplus is the one that comes back to your long term. Is it my next 5 years, 3 years goal, and this is my short-term goal, and this is my long-term goal. Next 10 years, you decide when do you want to retire, in next 10 years, 20 years, 30 years, depending on your age. I know in this room we have people mid-20s. At the same, we have people already that 60, 66, 65, right? You decide when you want to, and to just quit everything, do whatever you love to do, right? Retire, and then make those long-term investment plan. Okay. Now I know that there are people in this room that I wanted to find out, okay, what do I do now that this thing happened, and what should I do? Change my mindset, investment, also in the investment side. Now look, at somebody asked me, actually I'm going to go back and I look at, as I'm looking at it, there is a slide that I had it. Before I came in, I removed it. Investment areas, look for areas where there are still bargain price. There are some stocks still today that are more than 30%, 40% down. The comparing is price. Here, we usually use a thing called anybody. Good morning. We use tools to do a long-term analysis, and in the long-term analysis, then it tells you why is this. For a long term, this stock is at. Anybody remember anything? Give me a stock that you really care about. I'm going to go Boeing, because anybody has any number, let me know. Let's say Boeing, we all know it's American darling company, and America, by looking at this, what do you look at the price of Boeing today? It shows you here, according to Morningstar, this is paid information. It's undervalued right now. It's 39% discounted price where the Boeing is. Did this company go out of the business? Based on what we know, what they're saying, who knows? But look at this company right now. Its current company is a market cap. It's an $87 billion company. Yeah, there are something mistake they have made. We know that this is $600 stock, $400, $500 stock, but today it's like at this price, 155, it's closed. And according to Morningstar, it's a 4-star price. So it's a 4-star price, and it's a very good deal. So if somebody is looking to invest for next 2 years, look at here, and I'm going to put in front of you, and just that way you see Boeing, how does it look like? If we look into even monthly, the monthly last, look, at certain time, Boeing was here not too long ago, the June. But because of things happened, they are here. But is this how it's going to be this company forever? No, it's going to turn around. You just what they're going through some rough time. That's what happens every company. So but you do not have to buy all in the thing. You put a portion of money, you can put something like this. Again, these are the things we do during our session to explain to you short term, long term, where invest, where not to invest based on your goal. Okay, so when we say that, what can you do? Those are the things. Once you have that extra money after taking care of your basic needs, start thinking, okay, this money I can invest there. So as I mentioned earlier, when I started today is not the only session we are covering everything recession. There are some stocks, some areas, some sectors are underserved. There's very good opportunity. There are companies like Bank of America that, the JP Morgan and others are very good, solid company. That stock is undervalued. This is a good that you can buy it and just sit there on wait. You don't have to just go every single day, look at it. Oh my God, my stock is 10%, $10 up and $10. You don't care what happens today, tomorrow. You look it into long term. In a year, 2 years, 3 years, 5 years, what will happen? And so that when you see that this what we shared with you earlier, you are not looking at every day what happens to Apple. You're looking at you buying, let's say Apple 2018, if you'd be buying sitting there $42, today Apple would be this. Look, 3 years, in 3 years, it's more than 300% up. Or 2 years, right? These are the things, what do we do? In the stock market or in anything in life, the only strategy is buy low, sell high, buy low, sell high. This is what it is. You just find one is the low. You do not have to get the lowest price as long as it's a low for you. And it's a good company. It's going to be turning around. Shift those mindset. You don't need to have all the gurus to tell you, is this a good company or not. Boeing is a good company? Yeah. When I say yeah, means you go do your own analysis, listen and restarting. Those are the things we can do. Just like as I shared with you, if my 10th grade kids, high school kids today can analyze the stock, technical and fundamental on the both sides, short term, long term, you don't think you and I can do that? So we gotta shift our mindset and then shift our skills, that improve those skills. Today we don't know everything. Nobody knows everything, but we have tons of information at our hand, right? So did I get muted myself or somebody muted?
There's a issue with the people admitting and.
Okay, that's okay. That's all right. So these are the skills. That are the things we can do. This you and I need to start thinking of that. Learning never stops. Is one thing is always constant. It change. If I don't change, you don't change, we'll be left behind, right? The way we used to work, the way we used to eat, the way we used to have a friend, talk to one another. Today is different. Look at how we are talking to more than 50, 60, 100 people here, right? Everything changed. So that we can improve our skill. So what is the best thing to do with your money during this recession? Right now, I want to hear from you guys now. What do you think so far you learned?
Invest it.
You invest
go and buy stock while it is in dip stage, down stage.
Yes, in the discounted, right? Buy low, sell high. You look for areas where it's the best deal. It's not like stock, like there are companies are going to go out of business. There are so many companies that is going to be in more stress. But today, when you see the Hertz, many of you know, Hertz is going out of the business, right? Hut is going out of the business. So many other businesses going to be out. So we need to look for areas where we find out what type of business out there is undervalued and it's the best deal for you, and then they'll sustain with this. If country goes recession next 1 year, we have seen earlier 18 months in 2008 that business suffered. What type of business out there, if it happened to be in those session, that if it goes 18 months, do we know a company, that company is going to be surviving? Or if not, then go another place, right? So we need to be more informative and be more careful. Where do we invest our money? After protecting your family and having your necessity funds, emergency fund around you. Okay?
Is it a good time to buy the airline stock at the discount price, or it's already went up?
What do you think? Who asked this question? What do you think?
I think it's yet at a discount.
It's still low.
Still low, but is this a good time to buy?
I mean, I think it's risky personally because there are people that say that the aviation industry will not recover until 2023. So it depends on your, I think, your horizon and the confidence you have in a particular company's management. Some of these companies, I hear people say, and I don't even want to throw out names because I'm not an expert. They'll say, well, this airline has really great management. Now, if you believe that and you're willing to wait 5 years and, take the risk, it could go one way or another for a few years, but you believe, eventually the pandemic will be over and people, travel will, on the other hand, I just want to say one more thing, because a lot of the money that airlines make is in business travel. And it kind of raises the question as to what is going to permanently change after this pandemic, that maybe there were already trends like virtual meetings and things like that. And the question is how much of what people did and businesses did and individuals did before the pandemic started is actually going to really recover in an equal way.
Right, Mark. Yeah, thank you. Yes.
I mean, my favorite probably is Southwest. I think they have good management as far as I know. I can tell because the customer service is pretty good. I'm very happy whenever I fly Southwest. No issues.
But imagine this. Some of this stock right now is good value, good management, and some of these airlines stock gives dividends. But the moment they find out that that we do not have a still complete cure, and then Europe is shutting down, world is having the next shutdown, and then happening, and when is that whole tourism is going to be start normal again? Do you think those airlines is going to be in profit and keep giving away that type of dividends?
And I believe that that's the reason probably you have to look at which airlines are heavily invested in, international fleets and local fleets. I think people will fly within U.S. more than flying internationally.
Yes, but at the same time, even in people within the U.S. flying, that I do not know if you have recently flew, or I have friends that is still doing it every week. I talk to them. They say, in my plane I have 3 people. How long they can keep doing like this, and not to be going in the deep more hole in their debt? Are they going to be in profit?
No.
Right. And if the next government comes in, let's say Biden comes in, what do you think that Biden going to do? Oh yeah, our number is country is improving, right? There are more bad news coming in that industry, correct? So that's something again. I am not saying I know everything, but based on other areas, then why do I want to take a risk on an investment where look at what happened in the oil and the energy industry? Look at Chevron. Look at the Exxon Mobil, right? All of them. When is it gonna be? They'll turn around. Who knows? So many of them are already going out of business. The airlines and the casino, hotel, all of them going to get hit. And in this industry, if you want to think about why should we invest in things, think about the areas like who is going to be coming up, health, consumer, the product that cyclical product that people need to have every day, right? Basic needs, transportation, the areas like where you see the shipping industry, we in the country, FedEx, UPS. So there are other areas that doing very well, Those type of things you and I need to discover. But our next session is going to be on in that area a little bit more, and we are going to touch up more some of the people also said here, what are the economic indicator that you should be looking at when the recession coming in. So I'll touch up a little bit about economics, and then we're going to talk about some more about some of the investments that you should be considering if we face recession. Okay. And then those who join, I know a few people join for career advice. I know that for the how do you build your wealth? Oh, this is how do you build wealth? This is something I just want to have everybody think about this. Well, this is a simple like a pudding. Wealth is not like something like you do overnight. It's just like you have to do it small. Every small gain or profit is a profit. So now people ask me when we share the ticker and say, well, should I sell? And the first thing I ask them, how are you at loss or profit? And most of the time when people ask me those questions, they are at profit. Then I ask them how much. So I am 10%, 20% as well. With the current market the way it is, don't you think 20% is good for you? No, what if, that's up to you. What if it goes the other way? Or sometimes I tell people, if you have a 20% profit, sell 80% and leave that the 20% whatever profit money invested in the market, but stay with your cash.
Or stop loss.
Or stop loss also sometimes it can give you, if you are not in front of computer that much or able to monitor, you can do that, right? But sometimes the stop loss gives you false alert. What happens even look at that last couple days and weeks, stock all of a sudden market going down all the way, Dow Jones all the way down, even can turn around in the morning, turn around, right? So if you are not around there, is stop loss hit. I had people there is stop loss hit. Those who is new here that do not know stop loss meaning, you can set up some of the automated system in your profile, investing profile account. If you buy a stock automatically, if it goes the minimum price that you should, if it goes below a certain loss, it's going to be automatic selling everything automatically for you. But the nowadays stock is like jumping like kangaroo, up and down, up and down, up and down. But if you have those kind of moment, you just lost it, right? So that's why when somebody asks me that, I ask them, if you are 20% profit, look, nowadays profit is profit, no matter how small it is. So take it and just, if you really want to contribute, stay in the invested, leave investment, your profit invested, the rest take your capital out, right? So it's always consistent gain. Consistent gain is the key that you have to keep making profit. Otherwise, if certain stocks that you really care about it keep going down, as long as you know that you are willing to go 10%, 20% down, and then and this company is really good. Like for example, I'm giving you example Boeing. Boeing is today 155. It's a very strong company. You saw that it's already have a 4-star pricing. I have long-term investment with Boeing. I bought Boeing even today. Is it going to go down more? You never know it will. If it does, am I going to stop buying? No, I'm going to keep buying. I'm not selling Boeing. Right? But those are the thing. That's why your conviction come in. That in certain stock I'm going to hold on to. A certain stock I'm going to sell it. And I have a stock that I saw lost 90%. And I waited more than a year and a half, 2 years. At the end, I thought enough is enough. I'm taking loss and moving on. So those are the decisions you and I have to do, make the decision individually. So at the end of the day, we have to be a lifelong student. Have to think about there's nothing constant here. Things going to be changing. If things changes, what can you do to protect your investment for short term and long term? I think many of you know that this is my full-time thing. This is what I do now, trading. But I did not think that I would love trading. Now it's like, for me, it's passion. Because trading is a passion more than just doing anything. And do I make money? I make sometimes way more than that money that I used to make when I was even, working for a company in a year. In a day, I make that much money. Or sometimes I lose also that much money. But at the end of the day, if my up and down, if I'm ahead of the up part, who cares, right? But I have to stay disciplined. So that's what I do. I think many of you already know. You see that how we transformed. That's all I have today. And as I mentioned earlier, that we will be doing this session. This type next one session is going to be on recession. That okay, where in which areas you can look at some of those the sector that are good and some of the bad one that you should be aware of, and what type of business is like recession proof that you should be looking. And at the same time, that those who is looking at career was in job, what type of job is more safe than not safe during recession time. So we'll touch on that also. This way it kind of gives you some perspective. Same time, as usual, I always ask you that if you want to share something or you know something, please do reach out to me or any of the volunteers who is helping us. All right. So that's what I had, and now it's open for any type Q&A. Was it helpful?
Yes.
Yes, Mushi, it was very helpful and truly inspirational to know that you gave up your job and you're making a lot more being your own boss. So that's obviously something all of us aspire coming to America, and that's the American dream. So congratulations to you.
Thank you. Anyone else?
Can I ask a question? When you say you're making more money than before, is it mainly in options or stock investing?
Options.
Options, okay.
Yes, you cannot make that much money typically with the stock. The amount of your high option is where, as you know, Cindy, you are taking class. You have taken class. Option is very risky, and at the same time, option is also very rewarding if you know what you're doing. It's almost, think of this. Here you are. Here is your started. Here is your top destination. If you want to go there one step at a time, you're going up, bottom to up. You're taking stairs, one step to get there, right? That's kind of think of stock is like that. But option is you take the elevator, you push the button, bzz, you're there. Push the button, bzz, there, right? That's exactly what option is. If you do not know what you're doing option, it can kill you or it can make you a lot of money. That's when we talk about naked call, we talk about covered call, we talk about spread, we talk about all those iron condor, spread, all those different strategies in basic class and advanced classes. Okay. All right. Anything else?
Ushi, I had a question.
Yes.
And it was about the slide where you were saying about the things about a recession, the characteristics about a recession. And the question has to do with, you had in that list, you said REITs. And I know, we were talking about how, real estate could, have a slowdown in a recession. I mean, what I've always heard, except 2008 being the exception, that usually it's a trailing indicator. So it's usually like 6 months later, that it affects the real estate market. But now we're having the opposite effect. So but I wanted to ask specifically about the REITs, because Abdul had done that presentation recommending, which some of you might have attended, recommending various REITs like NLY, Real Estate Investment Trust. And I didn't know whether you literally mean that if we do go into recession and it's prolonged, that even though the REITs have high dividends, I didn't know whether implying that it's possible that the value of them could be at risk. I had looked at them as a more stable alternative to other equities, if there was a bigger downturn, in the stock market, and at least you'd have these stocks, where you'd be getting these really good dividends. And Abdul had talked about them, that they don't go up and down as much because they're mostly about the dividend. So I don't know if you had any comments on that.
Abdul, you're here, right?
Yes, I am.
Do you wanna chime in?
On far as the perceived value?
No, I mean if the risk, basically, because if there is a bigger downturn than we know now, that we don't know for certain, but if there was like a deeper recession, a more prolonged recession, like there was 2008, the first part of 2009, are these REITs at risk, and should one consider a point at which to unload them, or should one just sit through them, or does it depend on the particular REIT?
Well, like I said, the REITs, I mean, they pay the dividend, and if you look at the history on these REITs, they consistently pay dividends quarterly. And if you look at the history on them, even if the price fluctuates, it may drop. Like last week, for example, NLY, or this, I think it was yesterday, it was down for $7 from the $7.25. It doesn't move a whole lot, but you're going to receive the continued dividend. That's what you're aiming for on REITs. It's just a dividend, and as long as it doesn't disappear, you're good. And you're in for the long haul anyway. So I wouldn't refocus on that. Obviously, your whole portfolio is not on REITs, but I think if you're just looking for capturing dividends, you're safe. And price will go down with the market conditions, but eventually it'll come back up. But like I said, you're just looking only for income, and so that's my opinion.
Can I make a comment about dividend stocks? I'm kind of putting all my losses on a spreadsheet, and all my dividend stocks are the biggest losses that I have from this pandemic. It seems like the value of dividend stocks they went down dramatically in relation to other equities.
Right. I thank you, Cindy, sharing that. And Mark and others, if you are investing for long term and you used to look at income versus growth, so two type of stock, another one we use different term. But for now, look at that one. You have the income stock dividends. As you can see, that companies are losing their profit and they are not able to make enough beat the earnings. What are they going to do? They are going to reduce reduce their dividends. Some of them are already stopping the dividends. So if that happens, those stocks going to be get hit big time.
Yeah, that's what happened. Yeah.
So then is it in the long run? Is it good to just keep those stock, or just maybe you already got enough dividends? Look at areas that take those. If you are not at too much loss, sell it and buy. There are other discounted stock out there for long term. Like, and one of those things, Mark, that you mentioned, I'm not going to give the name to others, but during the midday when you mentioned one of the stock, right, that is less than $3 one or $5. I'll tell you that not so long, 6 months ago, 6 to 7 months ago, we told people that buy NEO. It was $3 less than 6 months ago. But look at NEO today. NEO is $28. I bought that for some people, and then I made so much money on the NEO that I took my profit out when NEO was more than 100%. Then I got all my capital out. Then from the profit side, still I'm in NEO. That NEO has so much. Like, look, from below $3 now it's $28. Can it go higher? You'll see. right?
One more thing I need to ask you whether see the way I do it, this stock thing, because I have a TSP, I put 20% every 2 weeks, whatever. So I don't touch TSP. I just put in a C fund, G fund, whatever. But on the cash account, I have a margin account. On the cash account, what I do is I go with the project base. So let's say I need to buy tires for my car. I need $600. I make $600 a week or so, then I'm out. So I don't touch my savings account. Let's say I'm going over to India. Let's say I need $2,000 ticket or something. So I buy stock. If I made 2,000, I'm done. I don't have to, it doesn't touch my savings account or checking account. So I'm good. This is how I am doing it for past 3 years. So far, it's working good for me.
It's working good for you, right?
Yes.
And this is a perfect example, guys. You just see that somebody's doing it, and these are the things I hear consistently from other people who is making money consistently. They don't get greedy. They're disciplined. Remember last one, they're disciplined. They know exactly what they want. They said, okay, I want this or X amount of money within a week, within a month, and based on that, they just, okay, what's there that I can invest today? You made that money, you just did it, you just move on. Just do something else. Go fishing, boating, whatever you want to do. But don't sit there all day and keep looking at computer. Oh, when am I going to do? When am I going to do? You don't have a clear goal that you set up. Same thing I do. So I have a certain amount of money that I want to make, that monthly, that translate to daily, the weekly, daily. Once I make the money, I don't sit there in front of computer trade that every day. What I do, those who already know during the day, I am there to just answer you guys' question. I'm there to support you. I share the trades there, but I don't make those trades every day.
Yeah, and also you have to take this thing I wish thing, otherwise you go nuts.
Exactly. You're being too hard on yourself. Right.
Mushi, may I suggest something? I think you brought up a very good point. This is Ram. So I think you brought up a very good point in terms of how we should have the next session. And I was wondering whether when we have so much of experience in the pool, right, people who have gone through previous recessions, right, what they have learned, can we actually hear back from people, right? Individual people, give them 10 minutes, 15 minutes slots, everybody, what they experienced, what was their learning lesson were, how they came out of it. I think Cindy pointed out something, Mark pointed out, Abdul was part of a recession. So, share your experiences with us and how you would have done the things differently. Each recession could be different, but I guess some strategies could be used, I guess.
I love that idea. Are you guys up for it?
I think it will help a lot of people because, there are people from all different decades in this group. So, 20s, 30s, as Mushi pointed out, right? I think it's going to be awesome. And like Mushi carried the torch today all by himself. So probably we need 3-4 people for next time, just collaborate 10, 15 minutes. And they don't need to, I think, do everybody can do their individual.
Minutes. Yeah. Start with 5 minutes that if you do not want to do PowerPoint, even Microsoft Word, whatever, just
or Excel sheet. Yeah. Pick some ticker where you think you invested wrong or how you'd have done. Like Cindy was pointing out how things went bad when she was invested in let's say dividend stocks, right? And it went down, they crashed, blah blah blah. What happened exactly, right?
Right.
I think there were some personal touch stories. I think those will be really great.
Good idea.
Yeah. Thank you.
Yeah. Cindy, are you up? Vic, you are in charge.
Okay.
Cindy, you got Cindy. Mark.
Yeah, I've got Cindy.
Okay.
All right, you got Cindy, Mark. We need 1 or 2 more person.
I wish I could do that. I was invested $0 in 2007, 2008, but yeah.
Anyone else? Come on.
I wasn't even born in 2008.
I like the gentleman who mentioned about TSP program.
Yeah, I guess at least we have 2 people. I think that's really good. Thanks a lot, Cindy and Mark. Really appreciate it. But I guess
Kamar,
if we can
No,
have a couple of more, I think that'll be great.
was it Kamar?
yeah, I'm not ready this time, but next time,
That's
hopefully.
this time. Next Tuesday or following Tuesday, a few minutes.
Yeah. And also one more thing, Mashid, the thing, do you believe in paying off your house versus
Ah,
paying mortgage?
I one of the thing in the guideline I wanted to say, just pay off the debt. Doesn't matter. Whatever, if
Yeah,
you have the money, you can sleep better. This is what one of the thing I have done. Just, you know what? I don't care.
yes.
At the end of the day, I don't owe anybody any money.
Yeah, fortunately, I paid my house off, so I enjoy my $450 home equity, $450,000 home equity line ready.
Yes.
So I bought 2 houses and rent it out.
Yep, and then some of this stuff exactly that you can do. Like those are the things. Like next week, and when we are talking about what else you can do, paying off debt is perfectly fine if you have done or you can. And then why not get the cheap money, right? The lending
Yeah,
money is very cheap, so to take advantage of it, since you can outbid the Honda, you can outbid the system. That Honda system, it gives you the advantage. Take advantage of it, take it and invest it wisely. You can pay it off before even you know it.
yeah, and also what I do is kind of strange too, but I don't know whether they're gonna laugh at me or not. But see, my home equity is my checking account. Period.
Mhm.
My job check goes to home equity to reduce my balance. I don't keep, my check doesn't come to checking account. It doesn't make any sense to put your paycheck in your checking account and sitting there for 15 days, somebody's making money. It doesn't make any sense to me. So my home equity is my checking account. If I need to buy a car, $10,000 cash, here's the check. So, I mean, that's why I do it. So my check doesn't go to my payroll from a job doesn't go to my checking account, because what are you going to do for 15 days sitting there for $3,000, $4,000? It doesn't make any sense.
So where does it go?
To reduce my my home equity balance.
To his wife's account.
It'll reduce my home equity account, and I pay less interest.
Yeah, I think that those are really. Thank you for sharing your wisdom. I think that's really good. Thank you. I think that's going to help.
I mean, this kind of thing, Kamar, I think Raman mentioned, hey, let's have a people idea. That's what, because I do not know if you are those who is still new with us, just Kamar, that you know that every day on our website, what we do, one of the things we do, if you go to our research services, stock of the day, we share certain ticker like every day, like today, this day, the ticker came, we shared, and then sometimes 1, 2, more than one we share. And those who is looking how the way it is, like we tell you ticker, and we tell you support, the buying price is support, and the resistance is the target, 83, 86, and tells you at what price you should be selling. This is all, and the type of the trade also tell you swing trade, meaning you can buy today, and if it does not touch that, if you buy it $80, if it did not touch 83, you can wait for overnight, 1 night, 2 night, 1 week, 2 weeks, it will touch this number or this number and then sell it, right? And then if it goes below this downside, at what price you should be selling this.
Okay.
So we kind of keep that.
Yeah, I'm kind of new to this group. Somebody added to me in this group, not maybe 3 weeks ago or so.
So,
but probably month ago or so. But I was out of country for 2 weeks, so.
Okay. Yeah. Because watch that. We do this, and all the recording, even today's recording, we on the top upper left side you'll see that, YouTube link. On the YouTube link that once I edit the video, I'll post it there so you can go watch it. There's a lot of videos that all the educational session is there free. And those who is learning, want to learn it, here is the one class schedule. We have all the classes we do. So far we have 7 or 8 classes that, which day, what, all the details are sitting there. Yeah, and then if you have any questions, the gentleman who runs his detail, he's Abdul Abrar, and his email, phone number are also there. You can call him. He's a great guy. He will answer any questions. And the membership is like, those who wants to be membership with a free member or paid member, as I mentioned, the money we use it for our charity. It's all the details, what the difference is all there. Or you become a free member. You don't have to be paid member. It's all up to you at how far you want to take it. But the money we generate, it goes to our charity. So yeah, take advantage of it. During the day, we are in Discord. You see the live room. We have Telegram and we have Discord. So that's also kind of gives during the whole day Discord. We have a lot of crazy, more than 1,400, 1,500 people in there. A lot of the day, the full-time traders are sitting in the Discord. They are answering the question. They are helping others in the Discord during the day. All right.
Thank you. So do you have any application tools we need to subscribe?
That's a very good question. You do not need to subscribe anything. What we do at the end, when we help people that are there, we have a paid services. You can see that in the Morning Star is a free, but at the same time, this information is not free. It's a paid information. So and then there are things like Benzinga. I do not know if you know what's a Benzinga. Benzinga Pro. If you take a look at it, Benzinga. On the Benzinga side, in even Benzinga Pro, that it's close to $200 a month. So we share this information with our members. So if somebody wants to know what's happening in the market real time, what's option, stock, and all the details and news, we will pass this information to the member. So everyone who is part of the paid members, they have access to those the information, whatever they're looking for.
Thanks for watching. Visit our website, UrbanHood.org, and join our community at meetup.com and look for financial freedom for you. Thank you, and we hope to see you soon.